What's up, my wonderful people? You're welcome back to my channel. This is DJ the Analyst, and I'm right here with you guys on this very particular video. Yeah, really, guys, I'm super excited with this video because what I'm about to share with you guys is something that is really going to benefit you all. Of course, you know, guys, that I give us tips and trading tips and updates that usually that can make us become profitable in our trading journey. So I'm bringing us a wonderful and exciting video which many of us have been expecting to watch and expecting to have. So make sure you stay to the end of this video, guys. Don't go anywhere. Watch to the end of this video. And once again, I really want to appreciate all of you guys which have been doing well by watching, liking, and following up my videos. In the last video I dropped, I can see how many of us reacted and follow up that video. I really want to appreciate your good words, guys. Keep following and don't forget to turn on the notification bell. Please, guys, turn on notification bell and always subscribe and follow this very channel because we know we are working towards a particular extent. So make sure, guys, you share so that other people over can also watch and also learn from this very particular video. So guys, now let's dive into this video or what we are going to have for what we're going to say in this video. So guys, in this video, guys, I'll be teaching you guys about the ICT because many traders have been asking me. They don't really understand what the ICT is all about. They don't know anything about the ICT, though they have been hearing about ICT trading, but they don't really know how this ICT stuff of a thing works. So that is why I'm going to be showing us and working us step by step on how you can understand ICT trading. All right, it's not a big deal or it's not a big stuff or complicated things or whatever. It is something that is very, very easy and understandable if you understand it. Okay, so but before I go into this, I want to also say this, guys. If you're a new beginner in this or into forex, or you are just coming into forex, please, this particular video is not really for you, okay? Because you need to get the foundation of trading before going into going into ICT. All right, so because going to ICT trading requires you where that trader has already outgrown or passed the level of basic things about trading. So that is why this video, if you are a beginner, please, this video is not for you. You can go to my channel and pick up you'll see videos that are meant for beginners. You can start all over from there and watch. Okay, so this video is majorly for those that have passed the level of beginners and trying to advance their knowledge on trading, because ICT is another level or way of trying to advance your knowledge about trading. So it's not a beginner's concept video. It's a video that for those who are trying to how will I put it, those who are trying to outgrow or get to a particular level, who have passed the first phase of trading. All right, so that is why this video is very, very important for such calibers of people. Okay, so now when we talk about the ICT trading, or we talk about ICT trading, what does it simply mean, or what does it talk about? Okay, now the word ICT, what does it mean? It talks about the inner circle traders. Okay, now if you talk about these inner circle traders, these are traders that actually they are traders, like I said, they are traders. I call them inner circle traders. They are actually traders, but they are not just nominal traders. Okay, these are traders that trade beyond just normal way of trading. Okay, they trade beyond normal trading styles of normal kind of trading beginners or whatever traders trade. So they go beyond that. Is their way of trading is deeper than just the shallow way of which traders trade. Okay, so that is why they are called the inner circle traders. They go beyond just trading. They are also call them the market makers. Okay, so these are people that go beyond just nominal trading styles. All right, so which so that is why they are they are called the ICT traders. And another thing about the interesting part of this ICT concept is something that will actually make you really have a good understanding about the market. The moment I learned about ICT trading, my understanding about forex trading changed, because I was once that kind of trader that don't really understand more about the market. When I see something in the market, I don't really understand, and I keep struggling till I begin to study more of ICT trading. Even I was in a channel when I was added in on Telegram talking about ICT then, but it was really complicated for me then, because I was not really grounded on the basic. That is why I'm saying this, guys. If you're not grounded on the basic about forex trading, or the basic thing you need to know about forex trading, don't go into this. Otherwise, you will get yourself more complicated. All right. So that is why you need to understand the basic fact about trading. So now, when we talk about this ICT trading, if you can see it, guys, let me zoom out a bit, and you can see that I talked about these are ICT trading strategies, a technical trading method that relies on chart analysis and market trends to make trades. Okay, so they are technical tradings. Okay, technical tradings. Now we'll talk about technical tradings. They're talking about these are kind of trading that involves chart analysis. All right, so they go with technical analysis. All right, so that is ICT. These are the things that comprises in ICT. So they go with technical analysis, chart analysis, and also market trend. So to make their trade. So they also involve these things, they put them into place before making a decision in the market. And you can also say that you can say he said this is a strategy that based on the idea that market trend can be predicted by the analyzing price action. Okay, so by analyzing price action, also they work with price action, and which is very, very, like I said, price action is a fundamental thing about trading that every trader must know. All right, so you need price action as a trader. You need to understand price action very, very well. For you to grow in trading, you need to know price action, because that is the basic elementary stuff you need to know about trading. So they move with price action, support and resistance level, other blocks, and identifying key areas of liquidity. Okay, so these things are what comprises of the ICT trading strategy. So if you can understand these things now, put them into place, know how to identify these things. Trust me very well, then you are good to go when it comes to trading the ICT trading, ICT strategy. Okay, so that is why I said earlier on in my, I'm saying that in this video right now, that if you don't really understand the basic thing about trading, this you cannot advance to ICT trading, because ICT trading is all about advancing from the elementary level to the secondary. So that is why you need to be grounded on your basic level of trading. So these are the things that comprise of ICT trading. So if you know all these things, then I believe that you can understand how to trade the ICT. So you see that these things are not, ICT trading is not difficult like the way many traders tend to make it look like. So it's not a difficult task. I myself too was seeing it before as something that was kind of difficult, but when I begin to understand that these things are not they are not really difficult, it's just for you to understand the principles that guides all these things. So we can see that this is a very easy. So they comprises knowing chart analysis and the trend of the markets, going with support and resistance, price action, other blocks, and also liquidity area. All right, guys. So I haven't known this now. So let's quickly dive into our chart as quick as possible, so that we don't waste much of our time. All right, so guys, now let's go into the chart now, talking about all the things we've seen and known about the ICT, so which we are going to put them into place. So before we do anything, like I do say, it is very, very important that as a trader you understand these things I'm about to show you guys. Make sure you stay to the end of this video. Don't skip this video so you don't miss out vital information that you are going to learn from this. So now the things like what we read so far in what we just did now, so you can see that one of the basic thing, or one of the first thing I do tell traders is, before you go into your trade or make decisions, don't be in rush to make decisions in your trade. Okay, don't be in haste to always want to execute. Don't be in haste to always want to jump into trades. All right. Now, it's very, very important that as a trader, you must first of all get a good market outlook. Okay, read time, trading time, or kind of, okay, let me put it this way, for you to know what the real time trading trends, okay, or market trend. Now, because many traders they are fond of these, trying to always want to rush into a market without even trying to understand what is the market doing. I just say this thing, that is the mindset every trader should always work with. Even professional traders always do this. Okay, they don't just jump into the market just because of what they are seeing. All right, now I can be saying this. Now let me tell you reasons why you need to always do your analysis very, very well. Because I can be seeing this happen in the market. Of course, I know this can be a buy. Okay, this is a buy. What I can be saying here, but how sure am I that this buy is a good buy? If perhaps I don't do my analysis, or I'm not analyzing the market very well, then how sure am I that this market is a very nice buy? How am I sure that this market is a very nice buy if perhaps I don't do, or I don't have my good analysis? All right. So that is why I said analysis is very, very important. As a good trader, you need to always have a comprehensive market outlook, all right, before you make a decision in the trade. So that is number one. And number two, which we also talked about, which called light analysis. So top analysis also move with your what knowing the trend, because when you do your top analysis, you can actually get the trend of the market, and you can also know what the market is actually doing. And before we dive into knowing your areas of support, resistance, and also knowing about the other blocks and fair value gaps. Okay, so these are the concept that I'm going to be showing you guys in this very video. All right, so areas of liquidity as well. So if you have not watched my video, I did a video about liquidity and inducement. If you've not watched that, so go to the description below. You're going to see that particular video. You can go and watch it so you can understand more of this concept of liquidity and inducement. All right, so back to what I was saying, guys. So now, after I've known this, now I can easily predict that this market, of course, is a bullish market. So I don't need to be told twice. I don't need anybody to tell me. I already know this market is a bullish market trend now, because you can say I'm starting with a higher time frame. So this is on daily time frame. So I love looking at market analysis on a daily time frame. Now, it does not necessarily mean that you cannot do your analysis on a time frame lower than this. You can also actually do it maybe on 8 hours or 4 hours, whatever time frame, but let it be on the higher time frame. Okay, now this I'm looking at on the daily time frame. So it's very simple that this market, I can tell that this is a bullish market. Okay, because and it also, because ICT also moves with what you know in market structures. Okay, so I can see this, that this is market buying with this, or with what I'm doing now, is a clear indicator that I can tell this market is giving us a good buy. So there's no two ways about that, no complications and all that. So you can see there that this market is giving us a nice bullish market move. A nice bullish market move. So which you can see here, guys. So I haven't said this now, because you can see that we have market or price taking out these highs. All right, so we have market breaking these highs and also taking out these highs, and you can also see price action taking out these highs as well. All right, so you can see price breaking these highs in this market. So when we see price doing this, it's a clear signal that this market is on a buy. All right, so forget about whatever illusion or whatever you are having in your mind. Always follow what the market is doing. It's very, very simple and clear. Okay, so now you can see here that this market this was our last high which we had the market created. So this was the last high, the market gave to us, and you see it dropping, which you can see as a sell or retracement, whatever you call it. But you can see here it drops back to where price drop back to around this area. I'm just giving you, this is complete. I'm trying to make this very simple and easy for us to understand, so you don't get confused. So let me delete this first line I did here. So you can see here that price action is on this particular area. Okay, so what is actually here, and that thing again, as a trader, you need to always know is, don't need to make things complicated. Always try to understand what is actually at a particular area or point that makes market to buy or sell, right? So like I said in my previous video, which I talk about inducement and liquidity, I said before that not everything you see in the market that actually is a buy or a sell or a good opportunity for you to trade. Is for you to filter the right opportunities that is good for you to trade in the market by knowing how to mark your key levels. If you don't watch my video on key level as well, I will also advise you go and watch my videos on key level. That will also help you understand more of what I'm going to be doing here right now. Okay, so you can see these guys, we have this will have this 11. Okay, so this is a very nice area, because for me, I would say this is a very good zone. You can see here that markets also came to this very point of interest, this zone here. All right, so now what do we have at this particular area here? So we can see that we have market broke this high was taken out, and market went up, came back to where this area, this, remember, this is a resistance, and resistance turned to a support there, and price was now coming back to that particular area where price was a support, resistance, and taking that as a support right now. Okay, so you can see that price action is indeed respecting these key zones which we have around this point here. All right, so there's nothing too complicated about this. So we have support, and price is taking at this or buying at this particular zone right now. And now these are the things I do tell or I do advise, because you can see here that market is buying here. Now you ask yourself, what should we do right now, or currently this market is buying? So what do we have here? You can see again that this is on daily time frame. I'm on daily chart, so you can see again that we do have a we have another block here, which you can see a bearish order block. Okay, so this buy might not necessarily be a buy that might go up to this next order block or swing highs around this place here, but you can see that we have a nearest order block here on daily, which it might price might hit before this next bearish order block around that point here. So this is order block 1, and this is another one above this region here. Okay, so these things are very easy, guys, if you can understand. Most times, because we don't know all these things, we feel okay, market comes around this point and you see market starting to reverse back, because we don't understand all this. That is why I told you these are the things ICT trading or traders always look at for. All right, because we are looking at a very nice good bearish order block around here. Now what made me feel this is the other block, for those of you that don't understand other block concept, is we talk about other block. We say other block is, you can see here that other block here, our other blocks are areas where buyers or sellers take their orders from. Okay, so where buyers or sellers comes to take their orders is known to be what? An order block. Very simple, guys. So either buyers or sellers are taking orders. Okay, so it's said to be what? An order block. So you can see here that we have a very bearish order block around this region here, and also you can see again that we also have a very nice bearish order block here, because I can see this was the last bullish candle. You can see this last bullish daily candle here that surfaces here before this one here, and this now gives us tells us that market is actually going to meet or going to that other block area. Okay, so where it's going to take out the sell from. So, and you can also see again here we have this other block again, which you can see the last bullish candle here, and before this bearish candle, then we expect this other block above too, because sellers are at this zone, and why sellers too are waiting at this zone. Okay, so and remember that we also have liquidity resting around these areas, and also here, so which market can come down again a bit to now buy to this point here. So now that being said, now this is very simple, guys, because I do this every time and then, because I tend to know how the market is going to move by doing a comprehensive market analysis, chart analysis, which will give me a clear view of the market. Okay, so now you can see here as well, guys, that these areas here, you can see this point we have where we'll talk about the market liquidity. You can see liquidity resting here and liquidity around this zone. And even at this point here, I told you guys that liquidity is resting here, but market might come to do something like this. So might have something like this before they move to the upside to this point and or to this zone here. So we have a lot of market liquidities here, which you can see around this point here, because we have equal lows here. Okay, which market might not obey when price comes there, might induce buyers that want to buy at this point here. And so we can also see that I'm going to show you guys how I identify my own liquidity areas. Okay, so just stay and watch this. So we can see in my video, okay, and I also done a video on that liquidity and inducement, so I would advise you go and watch. Okay, now you can see, guys, here that as well we can see that there are liquidity of market resting around this point here, which I can see here. Okay, now these are equal highs. Now let me explain the aspect of liquidity. Now liquidity, I said, is area where there is money, order flow, either buyers or sellers, where there are money resting waiting to be taken out. Okay, so you can see here that there is money resting around this period here. Okay, let me do some joins. I think that will be better. So let's see, there are money resting around this point here. So we have something like this and we have something like this. Okay, sorry, we have something like this. So this is a clear signal that liquidities are resting around some point. Okay, so we tend to see something like this in the market. So okay, guys, so you can see that we have something like this here. Now most times we see things like this. Okay, now this is very clear because at every point, which I said before, at every point, swing highs and lows, their liquidity resting around those points here. Now you can see this now that this market, look at what happened there. It picked up for a buy, then after it got here, it just dropped down again. Now gave the main buy that took out this high. Okay, now markets was able to take out this high here. Okay, this high around this point here, because there's a liquidity resting there. Okay, now many of you might say, I don't see any liquidity resting there. Of course, there's always liquidity resting at every swing highs and low points. So liquidity was resting around this point here. So that's why the market had to take out this liquidity with this buy. So trying to fake out buyers too, thinking that market has broke this structure high, so we want to sell, we want to buy the market continuously, not knowing that the market was only trying to take out the money that was resting here to sell the market. So traders that entered around this point here must have been taken out for buyers. Okay, and sellers that entered because market has hit their resistance zone here, not knowing that the market wanted to just take out liquidity resting here before the sell. So those that enter too quick in selling might be stopped out before the market make this move. All right, and this is one of the best things I've seen in the market, which I call the buy side liquidity. Okay, which market take out liquidity of buyers that are buying the market, then try to take it out. All right, so you can see here that this was very, very interesting, and this buy that came up here, which took out, because this first level here for me was serving as an inducement for buyers. Okay, so market tried to induce buyers there, and before giving the main buy, which we saw around this point here. So you can see here that this area here, there was another block or zone resting around that region, which the market tried to take or try to use. So when price came around this point here, and now take out, after taking out this small support level here that liquidity was resting on, the market had to hit this main support zone, other block buy that was resting around this place, or a gap, either a buy, other block or gap resting there. The market had to take out, use this buy to take out liquidity resting here, there before the drop, market, before the market dropped down. All right, so this is a concept that happens majorly most times in the market, and you see likewise the same thing for the buyers as well, which you see something like this. Just they happen countless times in the market. Okay, so this is something that happen lots of times every now and then in the market. But sometimes you are kind of confused that why is market trying to be mean to me, or why is market trying to do this to me, not knowing that the market was actually trying to what, it was actually trying to take out liquidity that was resting at a particular area or a particular point. Okay, so okay, now let me do this. Let me use this one. Sorry, let me do this. So let me use this one now. Okay, so the same thing happened here as well, guys. As you can see, this is for the buyers as well. Now, most times we experience scenarios like this as well. So we can see here that buyers that entered here at this point here. So market, they entered at this point because market was indeed on this support. All right, but you notice that after they entered, you find out that the market came down to take out these, taking out this support or this low here, as if it wants to sell. So they feel that this market, oh, I think the market still wants to sell because it has broken this support here, but not knowing, or little did they know that the market maker was only trying to take out liquidity that was resting here. So which traders that don't know, we feel that the market wants to sell by giving the breakout. That is why I tell traders that, or advise, I don't trade the breakout in the market, because breakouts, there are a lot of false breakouts that can happen in the market. I don't trade breakout. I wait for market to give me take out liquidity, or fake out traders, retail traders are going to the market, or that rush into early in the market. Like this now, they feel that this was a market breakout, and before you know, they already rush setting their sell or whatever in the market. Now market has given us a breakout, let us sell this market, and by so doing they don't know that this was actually the main goal of the market, to take out liquidity that was resting around this point here, and doing this and to continue the market's continuation trend. So these are things that ICT traders spot out for. Like me, most especially, I tend to always look at areas that market must have taken out liquidities resting at a particular level before I join the market. All right, so this is an example of what I'm saying so far here. When you see these guys now on the chart here, we can see that price has taken out, we have liquidity that was resting around this region here. We had liquidity, you can see here, this was market liquidity, nothing more, which you can see market liquidity that was resting at this point here. Okay, now you can see that at this point the buyers broke out with this momentum and tried to take out liquidity that was resting here, and you see that we also had this high broken as well. Okay, this high or level was broken as well, to tell us that actually the market is going on for a bullish market continuation. So liquidity was resting here, but they have to take out that liquidity, you can see, and continue the market move to the upside. So now these things are very interesting concept that traders must need to understand. Whenever you are, if you are ICT trader, you are trying to master or carry on your journey on how to trade the ICT, or you want to go deeper in trading the ICT concept, you must master this concept, which I'm showing you guys I'm showing you guys now so that you don't make the mistake of trying to rush into the market. So these things are very simple if you know how to apply and how to follow them. Okay, now you can see here again that we also have the other block level, okay, other block key or other block zones, which I love so much. I've already talked about that, and you can see that we also have the fair value gap. Now, the fair value gap, for many traders, I know many of you don't understand that, but I think let me show you guys about the fair value gap, which I think I did a video. Sorry, I mean I had a screenshot on the fair value gap. So let me see if I can find it to show you guys. All right, so here we are on the fair value gap. Okay, now you can see these traders. So I also have a lot of these here. So we can see at this point here, guys, this is a fair value gap. All right, now bullish fair value gap and bearish fair value gap. So this is a bullish and this is for bearish fair value gap. So we can see for the bullish fair value gap, we have these three bullish candle. All right, so if you notice, you ask yourself, why do they mark out these zones around this point as a gap? Now, mind you, when we talk about the fair value gap, we are talking about when price or when there's a movement of price. Okay, movement of price. Now, there's one thing you need to know about the market. When market moves, it always tends to leave a gap. All right, it always tends to leave a gap that, oh, when it moves, this gap that is here, I will come back to filling that gap. So that is what market tend to do. So when it moves, it always tends to come back to filling that gap which it left already. So we can see now that in this candle, market was moving, but was moving with a gap. Now the fair value gaps we always talk about. This is candle 1, 2, and 3. If you look at this candle 1, we have a wick at the top here. Candle 3, we have a wick below. So this wick and this third candle are lines. You can see where we drew this from this point here to this one. So connecting this first and third candle wick. So this area is a bullish gap. You can see that we have a bullish gap around here. So this is a gap for me. You can see this gap and this gap around here. So this is a gap, a bullish gap, where if the market has left already, so when price returns back to that gap there, then we can also take our buy from there. And you can see here that this is a bearish gap connecting this wick, first wick below and the third wick above. So this area becomes a gap where the market left, or bearish sellers or whatever left. So when price comes to that point there, then we can also pick for a market continuation sell. All right, so we can actually see this as well, that we also talk about the bearish order block. You can see this is the bearish order block, which I said so far. You can see that we have this other block here, and you can see how price this was inducement. Can you see this place now? Let me zoom out. Can you see this, guys, that this was an inducement level, but you can see this is where our orders are resting, and we are expecting if price goes to hit that other block there, we take our sell around that point there. So this area was not a sell, but was an inducement. We are waiting for price to hit this zone there before we go into our sell. All right, so which you can see here, very, very simple, guys. So we also talked about the key zones. Okay, you can see the key zones area, which I'm going to do on my other video. You can see the Asian key zone from 8 p.m. to 10 p.m. You can see it here, and I also see the London key zones. Okay, you can see the London key zone for 1 a.m. to 1 p.m. to 4 p.m. Okay, so these are London key zones, and you can also see the NY key zones. Okay, now this is NY key zones, which you can see here from 8 a.m. to 11, and you can see the London key zone again, 8 a.m. to 9 a.m. All right, so these are key zones areas where the market how the market tend to move. You can see from this London key zone here, the market opened around 8 a.m. to 9 a.m. and you can see how it was on a sell. Okay, now this one too, the same thing on a what is it called, NY key zones, 8 a.m. to 11 a.m. You can see how the market dropped then buy from that 8 a.m. to 11, which market was on a bullish market. Then you can see this one. So at every given time and point, you must understand the sections, okay, which I'm going to talk about, but not on this video. All right, so you can see this one from this 1 a.m. p.m. to 4 p.m., which we have the London key zone, which the market was on a buy, and this Asian key zone was ranging, okay, before the market broke out. So from 8 p.m. to 11 p.m. When you understand all these times, okay, when you know these times, these are things that actually can also help you before to time your entry or time your time your trade. Okay, so that is why these things are very important for you to know before you go into your trade. All right, so having said that, guys, I hope you guys understand what I just said so far. Now this is a very easy. Now talking about the gap here, we can see from what I just showed you guys so far, we can see that we have a gap here. This is a gap. All right, can you see this, guys? This is a gap for me. Okay, we have this gap, bullish gap here. Now look at it, we have this week here and this week after the second candle, the week here on what I just showed you guys. So the first week and the third week, so this leaves us a gap. So you can see the market went up with this bullish candle, now came back to this place where we have this gap here. Okay, you can see this now to fill in the gap around that zone. So you can see that after price touch or tapped into that gap there, you can see that the market started to buy around that point here because there is a gap that was resting around this point. And you can also see again that we also have a gap below. You also have a gap below around this point here, which you can see, or we can also tell that market we are waiting for price to buy. When price comes, either if it does not give us what we want at this, it comes down here, we can also get a buy before this other block. Okay, so there's a gap resting here, and we also have this. So for me, majorly, I always love to mark the other block and the gap all together. Okay, so I love to do something like this. So together with the other block. So you can see this is how majorly I do mark my own. So when price either it comes to here or this other zone around here, which we have the gap here. Okay, so this is very simple, guys. This is how ICT traders would take their trade. So we can see here that we also have a gap. We have a gap around this region here. So we have a bullish gap around here, which I can see. Okay, so we had a gap around this point here. Okay, you can see this, guys. Now before price comes to this point here, there's already a gap. Even here we had a gap here too. Okay, so let me even show you guys. We also had a gap around this point here. Can you see that we had a bullish gap here? Okay, you can see this candle here and this. Now it does not really matter for many traders. Many of you might say, I saw a bullish candle, why am I also talking about the bearish? Now it does not really matter. What matters is the gap that was left. Okay, so you can see that there was a wick here, and these are the third the wick at this first one and the wick at the bottom of the third candle. You can see this. So there's a gap that was left here, which the market came to fill in that gap around that point there. So you can see the same thing that happened here. So you can see that there was a gap resting around this point here. So this is a very easy, guys, if you understand how you mark out your gaps in the market. The same thing with this again as well. You can see that we had a gap 1, 2, and 3. So there's a gap here, bearish gap, which I marked together. That's why I was able to mark them together, because there is another block resting here, and also we also had a gap, a bearish gap around that point here. So that is why I had to mark this zone. Yeah, there's a gap resting there. And also here as well, we can see gaps, a lot of gaps here. We have a lot of them. So we have these. We also have a gap here. We also have a gap here, which you're waiting for market to come to fill in those gaps. So we had a gap here, which you can see that market indeed came to that gap. So we can see we had a gap around this point here that brought about this movement of the market. So the same thing as well. That is how we're marking it. You can see a gap here. Okay, you can see a gap around this point. You can take notice of a gap here. So you can see a lot of gaps here the market was creating before the movement of this market. So this is a very simple, guys. They are very easy if you understand how these things work. So these are ways me I trade. So ICT traders, these are the system which we apply when we are when we are trading in the market. Okay, so don't forget the concept of how the ICT traders trade. Areas where liquidities are taken out. Okay, we tend to spot out where liquidity has been taken out. Okay, either a buy side or sell side liquidity. And also we also spot out other blocks and gaps. Okay, and also tend to understand market trend, which is a structure, market trend with structures. Okay, so these things are things we look at for as a trader or ICT traders. So you can see that this concept of ICT is not really difficult. Okay, just like the way many traders makes it difficult for traders to understand, but they are not difficult if you understand how these things work. Believe me, you are going to get it perfectly well. So the major things for you to what go and backtest this, work on it very well to see how effective, how far you've gone with it, because you cannot actually know something if you are not backtesting and working on it. So you need to work more on it, go and backtest it and see how far you can go with it. So once you're able to understand, you're able to build yourself with it, then trust me, you are good to go when taking or trading it. Okay, so we can see here now the last one I'm going to be showing you guys. You can see this asset now. You can see that we have a lot of liquidities resting around these areas here, liquidity that market has really been finding difficult to break. Okay, so you can see you have liquidity highs. I told you guys that for you to identify liquidity, you must make sure we are seeing levels of highs and low, equal highs and low. Okay, so which you can see here that I can see these highs and all these areas here. So these are liquidity area for me, and you can see this point here. This level was actually also a liquidity zone. Okay, so areas where there's highs and lows in the market, so yeah, areas of liquidity. And this one as well, this is not a liquidity. Now this one here, if you look here, this is market liquidity, but this one here is not a liquidity. You can say, but we have liquidity resting there, but market has not tested that point there. Okay, so we see a fresh demand, sorry, fresh supply zone, which market have not tested. So you can see this point here. So we have area that market, this supply that has not been tested by price. So it's still a fresh supply zone. So you can see this market has taken out liquidity around this point here. So liquidity was taken out here, and also we have a demand zone here. Now this demand that we have here, this demand zone we had around this point here, this demand zone we had around here. Now you can see this demand zone. What do we call this demand zone? We can also say, you can also call it, you can see that at this point here, though market has tested this zone 1 2 now the third time. Okay, so might also act as a liquidity zone too as well, because it has been tested by price, and remember that it's not a fresh zone anymore. Okay, so this, we have a lot of liquidity around this point here. So that is why the market has actually be taking the plan of finding it difficult, I mean, to take out these liquidities areas around this point here. So if we are expecting price now to come to this point, because this, if price should buy around to get to this point, it really needs to take out lots of liquidity that are resting here. You can see liquidity, yeah, liquidity is at every swing point. Yeah, you can see liquidity here, and also around this point you can also have market liquidity resting here. So most times price might find it, market might find it really hard to break or take out these areas of liquidity. So but sometimes it can take, depending on the momentum of the market, or the momentum of the market shift, or how strong either the buyers or sellers, the candle of the buyers or sellers. So in this point here, it might be difficult for buyers to get or take out this liquidity. So instead of that, they might just keep pushing down and down. So just giving a buy to give a structure down to go down. So this is actually what we traders, for most times we don't rush in taking trades. So that is why you see us sometimes we are really, really calm when we go into, or before we take or make our decisions in the trade. It's not because we don't know how to execute a trade, but we are trying to what, always play safe after looking at what the market is doing. So we are always trying to what, do more of observation before making our decisions in the market. So I hope you guys enjoyed this video to the end. I hope that you've understood everything I said regarding to the ICT trading. So if you have questions, guys, don't forget to drop them in the comment section or ask them on the comment section. I'm sure I'm going to give you replies on that. And don't forget to like this video, give us a thumbs up, follow up, turn on the notification bell to get more of my new posts whenever I post them. Alright guys, so thank you so much for staying to this video. Have a wonderful time. Peace out guys.